What's going on, everybody? Welcome back to my channel. So for today's lesson, I thought about talking about how we can identify reversals in the market. Because we want to buy with the trend. So when the trend is to the upside, we want to clearly be taking buys. We're looking for price to pull back, then looking for that continuation, pull back, looking for that continuation. When the market's a sell bias, we want to see that pull back and then look for that continuation, the pull back and look for that continuation. We also might be looking for double bottom patterns to see the market holding structural levels, finding support at those levels, and then looking for the continuation to the upside. And we also might be looking for double top patterns where prices find support at these key levels before the continuation to the downside. So knowing that's how we should be trading, because that's really and truly what gives us the best risk to reward ratio, stops us from jumping into trades that are likely to keep us in drawdown for a long period of time, and the trades that are likely to go in our direction in line with the trends. So that being said, how do you identify, or how do we know when is the right time to stop looking for buys and start looking for sells, or stop looking for sells and start looking for buys? I'm going to give you an example today that's really helped me out in my trading, and I really do hope that this will help you out also. So with this example, let's take a look at the structure of the market. We can clearly see it's to the upside. So when the structure of the market is to the upside, what we want to be marking is our structural higher low. We're going to expect price to make the higher high eventually. When, we don't know, but if it's going to continue in an uptrend, that's what it's going to do. So let's play this out and see what happens. We're just waiting for the market to do one or two things. We're looking for the market to make that higher high, or we're looking for the market to come back and make that double bottom pattern, as I mentioned. So now we can see price has come back to this previous higher low. You can see here it's respecting. We have about 3 hours worth of information to indicate that price has not been able to break this higher low. And now we can see a strong pin bar or a wick rejection or a strong bullish candle to the upside. And now this warrants taking the trade. Now again, any trade that we take, we don't know if we're going to win that trade, and for sure we don't know if the market's going to go up. But what we do know, based on past history, that the likelihood of price going up is much higher than it is price going down. So taking this trade, what we want to do is just place our stop loss below the structure, take our entry here as an instant execution. This is not the example I'm trying to show you today, but we'll take this trade as an illustration, and then let's see what happens. So we take the trade. This is just in line with the trend. As we've said, we have either a higher low pattern that we're looking for a continuation, or we're looking for the market to create that double bottom. Once price moves 1 to 1, we just want to lock this trade in at break even, because all we're expecting now is the market to continue in our direction. So again, the market doesn't necessarily need to continue to push straight to the upside. It can pull back, it can create a new higher low, it can retest previous structure, and anything else it wants to do. But because this is a numbers game in this business, we just take this trade systematically in line with our trading rules, and whatever happens, happens. Regardless whether we get a win, a break-even trade, or a break-even trade in this instance, or a losing trade, should I say. So let it play out. Let's see what happens. So now we end the trade as a break-even. Okay, let's make a note of that. This is a break-even trade. Now, this is all part and parcel of being a trader. You're not going to win them all. And just so that you know, if you're using very good risk reward ratio, then even if you're around 30% right with a 1 to 3 risk reward ratio over the long run, as long as you're trading systematically and using a strategy that works, you'll make money. As you grow and get better as a trader, and you start to identify more patterns and understand structure and behavior, then of course your win percentage is going to increase dramatically. But until then, don't focus on trying to be a perfect trader. Just do the best you can in terms of managing your risk and taking your trades in line with the direction of the market. So let's continue. We can see that the market was pushing to the upside here. We took a trade as a double bottom pattern. Price then pushed to the upside, and we can see that we've been taken out break even. So the first things first that we want to identify here, in order to identify a potential reversal or end of a trend continuation, is the fact that this market is really extended to the upside. The second thing we want to identify is our previous structural higher high and how price is reacting to this level right now. Now, even though we had this same example here, price was reacting to this level, this was our higher low, and look what happened at this stage. Price respected this as a double bottom pattern. So if we take this information over to where we're looking at now, we have this structural high. We had price respecting this level for a period of time, 2 hours in fact, but then look what happened. Price broke below that structure. Now this is a strong sign of a potential reversal in any market structure you face. And I'll tell you the theory behind this. If the market is making structural higher highs and higher lows, and price is not able to break the structural low, then in theory, the market structure is still bullish. If price action takes out the previous low and fails to make a new higher high, then this is indicating another sign. Higher high is being respected as a resistance level. Bulls are not able to break above that structure, and sellers are able to violate previous structure with this break. So now that we have that pattern here, what we want to be looking at is how the market is forming. So when we see this structure, what we want to do is take our structural high, our structural higher low, the break below the structure, and then look what we can do here as well. We can take a line and identify that for a very long period of time, price was not able to break below this line here. Let's view it as a brick wall, and then eventually it broke and closed below. So now it doesn't necessarily mean we're looking for sells immediately, but what it does mean is it might be time to let the buyers go until price either makes a new higher high or price is able to break above structure and continually show strong signs of bullish pressure. Let's continue and see what happens. So the market does look like it's creating a higher low. Okay, but understand this is where the higher low was previously created, and this is where price was showing that it respected it, but then we had the violation. So what's happening right now is price is creating what most traders will see as a higher low, because they tend to then start to pull their trend lines like this to make it all line up. But we're not stupid. We're not buying this market into this strong level because we know there's a strong chance it's not going to break it. So we want price, if we're continuing to buy, is illustrate the bullish structure and then break above to continue illustrating that bullish structure. And unless that happens, we are not buying, even if you make the trend line look like it's being respected. So let's continue to see what happens. Price is reacting from this level as we expected. And now what we're looking for is for the market just to continue in a bearish formation to illustrate that, guess what? We shouldn't be buying here. Because 1, we have evidence of price breaking structure indicating bearish pressure. 2, price is not able to make a new higher high. And 3, we are not drawing our trend lines to work for us. We are drawing our structural line to see how price has traded above and eventually violating. So now all we're waiting for, now we've seen and I've identified the reversal, is for structure to form a lower high formation in line with how a trend builds. Structure down, pullback, lower high, and then looking for that lower high eventually. Okay, so that's what we're looking for, just patiently waiting. We don't want to take trades that are very hard to read or trades that look like they're moving in sideways moving markets. We just want clean structure. 1 trade a week is all you need. And if you do that consistently over the month, risking 2%, then you're going to be in a very good place. Not saying you're going to win them all. That's why you need to take more than 1 trade. But I'm just saying, if you're patient enough to allow the market to build up, then you can look for trading opportunities. So now, what do we see here? Well, we see price is creating a lower high. We see on 2 hours worth of information that price is failing to make a new higher high of the structure. And what we want to be doing is taking this trade with momentum in line with the overall bias of this market and the evidence we've gathered over here from this reversal. So we look to take our trade with momentum using a sell stop order. So that means if price decides to go up, then guess what? We're not going to get triggered into this trade. And if price decides to go down, then we're taking our trade with the directional bias of the market and with momentum. So let's play this out and see what happens. Now, with all the examples that I'm showing you here, they are illustrated more often than not to win. But the reason I'm doing this is not because I'm trying to trick you into saying that this is as easy as it's going to be, because it's not. But what I'm trying to do is help you understand the process of identifying a reversal in the market or a trend, or to identify when a trend has changed, and also to identify when not to take trades because you think that it's a higher low, and how to manage your risk. But the point is, guys, this example hopefully will win. From the last time I checked it, it did. So let's see what happens. But just to illustrate this again, okay, while this is playing out, What we want to see here in the market is a trending market to the upside. We're looking for double bottom high low patterns. Once we have a high low pattern and price fails to break above this structure, this is indicating some sort of bearish pressure. When the market then creates new structure, you don't want to be changing your trend line and making it work for you. You want to be identifying your range from the high low that you think it is to the high to make sure you're not taking your trade into key levels in the market, especially if the market illustrates a break and bearish pressure to the downside. Once the market then breaks and starts to indicate this continued bearish pressure, then what you're looking for the market to do is create sell structure with a lower high formation and then look for this continuation to the downside. So let's see what happens with this trade. I don't know what happens, to be honest with you. Let's forward it just to get it over and done with. And there you have it. We have a take profit. Okay. So this is a very simple example, very short lesson, but super powerful. What time frames can you use it on? Well, you can use it on any. Make sure you're using a higher time frame to look for a directional bias. And then on any entry time frame you use, make sure you're looking for the patterns that signify what the higher time frames are doing. I hope this lesson was useful for you. And as I always say, please smash that like button, subscribe, and until next time, take care.